Unlock the high returns of the expanding venture capital world right here on the Emerging Managers Podcast.
Hello, welcome back to the Emerging Managers Podcast. I'm Scott Kelly, your host and the founder and CEO of Black Dog Venture Partners. On today's episode, we have Alana Mann, the general partner of 11 Wall Ventures. They're a seed fund investing in visionary founders who are transforming legacy industries through applied AI and deep domain expertise. She focuses on early stage companies developing transformative technology with market-defining potential outside the traditional venture hubs like San Francisco. Prior to her work at 11 Wall, she's worked for Latimer Ventures, where she led dynamic fundraising efforts and a robust pipeline of category-leading enterprise SaaS companies. And then prior to that, she was a principal at Cultivation Capital, where she spearheaded high-conviction investments in enterprise SaaS companies like Element 451, Lion's Eyes, and Kangaroo on Time, and many, many others. So let's listen in and let's get her perspective on how AI is transforming traditional industries and how deep technology is happening outside of the major hubs like San Francisco. But we'll be back with my key takeaways. Well, hello, everybody. My name is Scott Kelly, founder and CEO of Black Dog Venture Partners and your host for the Emerging Managers Podcast. And I'm excited to introduce Alana Mann of 11 Wall Ventures. Alana, thanks and welcome to the show.
Thanks for having me. Excited to be here.
Awesome. So before we get into what you're doing at 11 Wall Ventures, maybe share a little bit about your background prior to being part of the fund.
Yeah, of course. So I'm originally from New Jersey. I actually went to boarding school in New Jersey, a place called Lawrenceville. I give it a shout out because there's actually quite a few people from my high school now in the venture world and on the founder side and on the investor side and even on the allocator side as well. I went to Vanderbilt for undergrad. Vanderbilt has been obviously trying to catch up in terms of all things entrepreneurship. So fortunate to have been, involved with Vanderbilt as well in terms of their entrepreneurship community. Took the path of, I'd say, probably the most resistance, which was the long way to becoming an entrepreneur, which is starting off my career as an operator, worked in corporate retail for several years at some big names, Saks, Jet.com, Walmart e-commerce, prior to kind of launching my own venture at the time in fashion, and learned about VC the hard way, which was as an entrepreneur, first time entrepreneur, trying to figure out, all aspects of how can I be the best entrepreneur out there. And of course, raise venture funding, learned a lot and just started seeing venture as an interesting problem I felt uniquely positioned to solve, having been obviously new to the venture world and then also having, this kind of like corporate retail and consumer experience as well. Pivoted into venture full time during COVID, actually started at a Midwest-based fund called Cultivation Capital. Cultivation's been around north of 10 plus years now. Their entire thesis is really focused on early stage venture. They have different verticals, but really I spent all my time investing in enterprise software, specifically leading Series A rounds. At the time, leading those Series A rounds with like a $2 to $3 million check. And this is now, approaching peak 2021, where $2 to $3 million was easy for any founder to get. And so something that you learn investing in, companies being based at a Midwest-based firm is that valuation really matters. And so that was one of the big takeaways. I remember anytime I bring in a deal, could we get, the best valuation entry point on it? When I was on, calls with other SF-based, New York-based VCs, they're like, valuation doesn't matter, who cares? And I'm pitching to our IC trying to get like a sub 10 million entry point valuation on like a Series A company, right? It was really great experience there. I moved on to join a firm called Latimer. Latimer's entire thesis, again, enterprise software, but a little bit more focused, I'd say, around Black and Latinx founders. Latimer's thesis has really kind of evolved to be, of course, really, I'd say, more technical focused on, AI, machine learning, DevOps, dev tools, that sort of thing. Led some great companies in terms of being sourced and, of course, investments as well at Latimer. And then most recently spun out to launch a new firm called 11 Wall Ventures. 11 Wall's thesis is squarely focused on investing in vertical AI companies. When we say vertical AI, really we're talking about, is there deep founder market fit in the form of one of these founders has been in this industry vertical for, let's say, a decade or so, and they
Mhm.
have almost, I'd say, like that deep, almost legacy industry expertise that informs now why they're so uniquely and equipped to really build a category defining business in that particular vertical. And the verticals we get most excited about, it's insure tech, it's fintech, logistics, and health tech. And, right now, we've been out of stealth for nearly 4 months. So we're just, of course, starting to, have really great fundraising conversations and momentum
Mhm.
there. But as you know, like when you're fundraising, can't really share too much. But really, what it comes down to is, again, like we're focused on seed stage investments, and more specifically, vertical AI companies. And we have a really strong affinity for new geographies that maybe have not been a traditional tech hub. So we really like to
Mhm.
invest outside of SF, Boston, and New York, and do a lot of community building work. We actually just got back from Art Basel in Miami. And kind of our next big event is starting to plan is South by Southwest. So we
Mhm.
have some really great perspectives on kind of the geographies, again, like outside SF, New York, Boston. And that's
Right.
also very much so what our track record has supported historically as well.
That's awesome. Yes, obviously there's a lot of intersections in your intro. I lived in the Northeast, and I would drive from Philadelphia through New Jersey to New York many times. And you mentioned Vanderbilt. I just hosted an event in Nashville a week and a
Okay,
half
cool.
ago,
That's
and we're
awesome.
going to host a pitch event. We're actually actually having conversations with Vanderbilt about actually hosting with them. And I was at Art Basel. We probably didn't run each other, obviously, and then it's interesting. South by I went to South by first as a owner of a record label, and then
Mhm.
obviously the interactive portion has now just exploded, and so we're able to run each other in Austin too. So let's talk a little bit more about. Let's hone down the thesis a little bit. Obviously, because AI is all kinds of buzz, and
Mhm.
so obviously, when you're talking AI outside of the technology, maybe share like what are the attributes of the founders and the people that you're investing with? Let's talk about that a little bit.
Yeah, of course. So for us, we're really big about our investor scorecard, right? And so anytime we look at a deal, we bring an investor scorecard. Each GP brings that to our kind of first partners meeting, talking
Okay.
about that deal. And really, it comes down to four big buckets. So the first big bucket is like, is this a white space opportunity, right? So in the world of AI, people say, okay, there's now AI for everything. And that is largely true, right? AI has
Mm-hmm.
become saturated. But we're very niche when we say vertical AI. So we're only talking about application layer companies. We're only talking about companies that are really building for a very specific industry vertical that they themselves have lived experience in. So that also does like automatically disqualify, the investment banking sort of
Right.
founder spin out, right? Like,
Right.
it disqualifies Jeff Bezos, which is crazy to think, right? But to some extent, not every founder is going to have like the investment banking, started an online bookstore sort of experience, right?
Sure. Sure.
And so for us, we really gravitate towards folks that have that deep industry expertise. We feel like they're able to hone in again, like on that like white space market, like what is the niche component of this market that no one else is seeing? And then of course, like what is the differentiated go-to-market strategy? So again, like a great example, there's a company that I invested in back at Cultivation, my past track record, where he was really focused on the very low segment of kind of his higher education market. And because of that, no one else was going after that portion of the industry. And so that becomes their differentiated go-to-market strategy. That becomes kind of their white space. That becomes where they can build a category defining business and become that category leader in the space. And then like the second big bucket is we always say like, okay, like why now? Like, is there momentum? Like, what are the trends accelerating this industry forward? So when we think about, for example, logistics, insurtech, fintech, health tech, we see the opportunity, which is that there's about 2.5 trillion trapped in manual workflows that is ripe for disruption by AI. And largely the lion's share of that disruption will come from enterprises wanting to adopt these solutions. So it really has to be enterprise grade, the solutions that founders are building. But again, that's like that momentum that's validates why now. And then that third big bucket is okay, like why do the founders have an unfair advantage, right? Like, for example, did Jeff Bezos have an unfair advantage? I don't know, right? But it was about the timing, right? And so
Mhm. Sure.
best case scenario, we can find the four, like I said, so it's white space, it's differentiate go to market, it's that second piece is right. Why now? What's the momentum? Why are there trends working in their favor? And then, of course, three is like founders have that unfair advantage. For us, when we see founders in an unfair advantage, again, it's like, do they have deep legacy industry expertise? Have they been in this industry as an operator or as a customer? And if so, how does that now inform their experience? Because the one thing that I always come back to, I think it was maybe 2 months or so, OpenAI had to hire all these healthcare execs. And you see the same happening in financial services, right? Like
Sure.
you cannot train the LLMs fast enough to kind of figure out this industry expertise. And so
Mhm.
that's kind of like the third big bucket for us. And the fourth big bucket is just what are the exits in the space? Like, is it a lot of M&A happening in the space? And if so, like what do the actual multiples look like for this to really be a sizable outcome? Because the name of the game in venture, of course, is, power law. And we want to make sure we're underwriting
Mhm.
investment to be kind of that top tier, better than the last investment that we did, so that we're constantly not only evolving and getting smarter, but constantly pushing ourselves to do the best investments that we can.
Right. Now, is this an actual scorecard? I mean, is
Yes,
there like
it's
a
an actual
checkbox?
scorecard.
I mean, if you don't mind, I'd like to learn a little bit more about what this scorecard is for,
Of
because
course.
obviously we've got two groups of listeners. Obviously, we have entrepreneurs, but we have a lot of LPs and
Mhm.
family offices and others listening. But for the entrepreneurs, how do you get a good scorecard
Yeah, of
with
course.
you guys?
Well, I mean, this is where I always tell people don't fake the funk. If you don't have something, like be transparent, be honest, because that's the one
Uh-huh.
thing that matters most when you're building trust. And anytime you're fundraising, either from LPs or if I'm, chatting with the founder and trying to learn about their business, the most
Hmm.
important thing is like, can we both trust each other? And is there a mutual
Right.
trust here? And so I'd say like, just long and short answer. Number one, always be honest, always be transparent. But two, white space opportunity, like that should be like part of like how you narrowed in on this business from the start.
Hmm.
So that's
Right.
not something that you can really fake, right? Like to me, that's understanding, okay, not just the broader market opportunity, but what is niche about your business? It's kind of something someone said a while back, which is that, and this is, one of the legendary VCs said this a while back, which is that most businesses in the earliest days, they were really niche and very narrow. And those
Hmm.
businesses, because they were able to build such deep loyalty with that core group of early customers by being so narrow, so focused, now they're able to eventually become mass, eventually become, mainstream. And now everyone sees the appeal and is as loyal as that initial group. But you have to kind of start with that very, very narrow set. And that narrow opportunity set does come from finding a white space in a larger TAM, right? Because everyone talks about the large TAM, but no one talks about the white space as much. I find
Hmm.
usually the founders that are thinking about go to market and thinking about how to build repeatable motions on the go to market side, they know who those people are and where to find them. And that's kind of like that first bucket. It's not just, hey, I know what this very unique niche group of customers looks like. It's also, I know how to find them in a way no one else does. And this is why they're only going to come to me. And that does create defensible moats at scale, because
Hmm.
distribution is one thing that no one can steal from you once it's done right.
Right.
So I'd say, yeah, go ahead.
Yeah, yeah. Another lesson learned from Jeff Bezos, selling books and nothing but books for a while. But go ahead,
Yeah,
keep going.
it's true. It's true. You hate to say, but that is exactly. He was very good at selling books. And then kind of the second piece of that being to in terms of advice to founders when it comes to like, okay, what's the momentum, the trends working in their favor? I think again, like the proof is in the pudding. Like you should be able to assess why you are building this business now and why building this business now outranks the possibility of success in 10 years 20 years,
Hmm.
et cetera. And why, if I invest now, I'm going to be able to generate outsized returns for my investors relative to 10 years from now. So I think that for founders should be like table stakes, bare minimum. And then, of course, like being able to speak to your background and your founder market fit is, of course, the most inevitable and important piece. I think most
Sure.
founders are really good at that. I think what most founders forget sometimes is that loyalty comes in lots of different flavors these days. So I think like a lot of times people say like, oh, this is my first time being a founder, but they have like a newsletter with 100,000 people. I'm like, that counts for something, right? Like that's
Right.
not saying that's, a business, perhaps
Sure.
it is, perhaps they, monetize that newsletter. I don't know, but in
Right.
some degree, they still have loyal fans. And that kind of leadership and thought leadership does typically translate into
Hmm.
early customers, early people on the wait list, early pilots, maybe even
Hmm.
someone who becomes an advocate at a larger enterprise to get you guys in the door. So I
Right.
think a lot of times founders maybe downplay what their unfair advantage is, and
Mm-hmm.
how that thought leadership evolves. 'Cause I see lots of founders now that will, maybe they've been creators or maybe they've just been on LinkedIn since day one, and they do have these very loyal fan bases, and maybe like they've written a book, whatever it is, that creates an affinity group. And those affinity groups
Hmm.
do actually typically turn into early customers in one shape or form, or even they sometimes will participate as an angel investor into your next,
Yeah.
round. So I think a lot of times people maybe downplay the unfair advantage piece.
Hmm.
And then in terms of just like knowing the exits and kind of recent M&A, most founders,
Sure.
I think, spend a lot of time trying to familiarize themselves with that. So I think
Hmm.
that's an easy one too.
So let's touch on geography. Much like you, I agree. I spent 15 years in Silicon Valley, started my career in New York, and worked all the big markets. And I found great entrepreneurs at great valuations in the places that people don't go to all the time. So touch on some of the markets that you're intrigued by. Where are you looking from? Looking geographically.
Yeah, so something about us and as a team really is, I think, kind of interesting and compelling. So we did a ton of research on basically each ecosystem and ranked it on a few myriad of factors. So for
Okay.
us, the biggest piece is what is the existing talent pool? And to some
Hmm.
extent, that talent pool usually is largely influenced by what Fortune 500s are there, what large enterprises are there, and that kind of can contribute to spinouts, founders who are now, again, trying to solve that
Hmm.
exact problem they experienced as an operator or a customer. And then on the flip side of that, what is the actual gap in terms of the funding mechanisms in place?
Hmm.
Obviously, like, SF, New York, Boston, there's no funding gap for founders, right?
Right.
Like being able to assess what this funding gap looks on a very strategic level is a
Hmm.
big piece in how we ranked kind of each ecosystem, because of course talent is a huge piece of it, but it also there has to be kind of like the opportunity to course
Hmm.
correct in terms of either capital there or capital that we can bring there, right? And so that was the second big piece. And the third piece is we have what's called like a venture partner program. So for us, we're really big on having boots on the ground in these ecosystems. Typically, that
Hmm.
looks like a great example of someone is someone who's a super connector. Maybe they're an operator, maybe they're working at, the big coolest startup in town. And so they just do a lot of ecosystem building kind of organically. So they're already hosting
Hmm.
LP dinners, they're hosting founder
Right.
happy hours, and they're already doing all these things, but now it's kind of equipping them with the tool set and the resources of our fund to kind of
Hmm.
optimize and scale that up. And so those kind of three main buckets, I'd say, is like how we ranked and assessed which ecosystem. And then kind of the targets ended up being Michigan, Ohio, Florida, Texas, and then we're talking about either Nevada or Arizona. And
Hmm.
a lot of that again will come from kind of who we find in terms of our boots on the ground in terms of a potential venture partner there.
Well, as a resident of Florida, I heavily endorse Florida. So that's great. I appreciate that. So let's talk a little bit more about you know you shared a couple of success stories to the extent you feel comfortable, either from your previous work in the previous firms or what you're doing now. Any names that you're excited about? Obviously, everyone doesn't want to. They don't want to point out one of their children, but maybe there's a special child that has done really well, great story, or a great story to come.
Yeah, of course. So I'll give one example. I just won't say the name of the company.
Okay.
So this is a company that we invested in when I was at Cultivation, and the
Hmm.
founder, again, outside of SF, New York, Boston. That company super capital efficient. So essentially, initial check was about 2 million into the Series A,
Hmm.
500K into the Series B, and then they raised 175 million in a Series C in December of last year. And so
Hmm.
you can see kind of the trajectory of the company is, that
Right.
hockey stick sort of growth, not in terms
Sure.
of just valuation, but of course revenue and how they built a really sizable and sustainable business. I think kind of what stood out to me about that success story is the founder, one, has always just been super, super capital efficient. And then two, of course, I think a lot of times when people think about, different industries, so this is an ed tech company, they always
Hmm.
want to sell into the top end of the industry. And sometimes the
Hmm.
top end will just mean the, largest enterprises. But sometimes if you can sell into kind of the, bottom tier schools or community colleges, et cetera, that kind of can be your niche that you own because everyone else is so focused on these top 20 schools. And specifically, this company sells into admissions offices. So they're able to really carve out a sizable niche, um,
Hmm.
and also have that differentiated go to market. And of course, that founder also had really deep founder market fit in the sense that, they had the lived experience of being in higher education, having built a consulting business to understand this
Hmm.
problem firsthand and work for those early customers, converted those early customers to the tech solution. And then, of course, like I mentioned, like built a really sizable, successful business as well. So I definitely would say that's the biggest success story. And
Uh-huh.
when I think about just that timeline, I mean, that's really from 2021 to 2024. So that's amazing.
Hmm. That's awesome. So obviously you have a focus on investing in AI. Obviously that's obviously a big part of your thesis. How does AI play into the operations of you running your firm?
Yeah, of course. That was such a great question. And it's interesting, right? Because I think so many people now say, oh, we use AI for sourcing. I know a lot of people now are talking about Bordy. I don't know if you've ever done one of the Bordy calls, or just kind of have
Yeah.
them, I feel like lately Bordy will always be trying to send me deal flow. I'm always like, all right, what is it? Because they'll just pitch me, and it's kind of a little annoying, I think, a little.
Right. Right.
But yeah, so for us, we don't really see AI as being like a sourcing layer, but we see AI sometimes as helping as kind of like almost if you think of the role of an analyst in terms of
Hmm.
kind of helping with early stages of diligence. Um,
Hmm.
and that being said, like we have some tools that we use for that
Hmm.
do kind of model out early stages of diligence. But again, this is all still under the premise and focus of our investor scorecard. So really kind
Right.
of forcing AI to course rank relative to kind of our needs and how we differentiate
Hmm.
in terms of our diligence process is still
Hmm.
top of mind. And then I do anticipate at one point we probably will look at some of those AI tools out there that just can help scale up in terms of, I'd say, the future layer, which is okay, portfolio monitoring. And there are some solutions
Hmm.
out there that we've started looking at, but we haven't necessarily moved forward with anything yet.
Okay. So let's talk to potential investors listening in because the reason why we launched this podcast is honestly to get recognition for the non-monolithic funds, the folks that are grinding it out and providing better returns and better focus and more founder support. So I guess that I'll start with a leading question and then we'll kind of maybe dive into it. First of all, let's who's the current makeup of the fund now? Who are your investors now? And then we'll talk about who potential investors might be.
Yeah, of course. Great question. So for us, when we think about like our ICP on the LP side, it's typically family offices. Um,
Hmm.
I've heard people say that's everyone's ICP. Typically, though, what's been kind of interesting for us, we've also been getting a lot of interest from international folks, which is kind of cool. So not just US-based family offices, but family offices, internationally as well. I'd say Europe, we've seen some in Asia as well. And then outside of that, it really typically comes down to they'll have maybe like almost like a next generation that's now managing their venture strategy. They've had some
Hmm.
exposure to venture, they like venture, and they want to double down on venture. What we find, and I'm sure most people on this podcast would agree, if someone spent their entire career making money in commercial real estate, they're probably not your ICP for your early stage venture fund, right? And so we don't
Right.
spend too much time with folks that have not done venture.
Sure.
We really like to spend time with folks that, again, have passion, have existing exposure, and have someone who's kind of just next gen in seat, who can kind of be that internal advocate for us. I saw something
Hmm.
time online that said the best LPs you have 2 to 3 internal advocates at. And I was like, that's
Hmm.
pretty cool. And I think really with our ICP, we've been starting to see that, which is like, okay, we maybe know the son, we maybe know the wife, and like now how do
Right.
we find like that third internal advocate as well? Um,
Hmm.
and these are again like managed still by the principals, as
Sure.
opposed to going like through like the traditional like consultant or OCIO route, because I think what most emerging managers will say is like that can be an arduous process in itself.
Sure, sure. So, now, obviously, as I mentioned, there's 3,200 venture capital funds at the end of last year, and the vast majority of the LP capital went to the top one half of 1%. A very small portion of that. So, to those listening in who are looking to be involved in venture, have invested in some of the more prominent names. Why your fund? Why now?
Yeah, of course. So I think for us, like the main piece that I always typically will say is like for us, it comes down to, I'd say, 2 buckets, right? Like when you're assessing a manager, like the biggest bucket should be track record. Like what have we done and how does that track
Hmm.
record inform our go forward strategy?
Right.
Fortunately for us, we have a phenomenal track record. We all have been institutional investors before. So it's kind of not as, as cool as some of the angel investors spinning out of Anduril to launch a fund, but we're pretty cool in the sense that we have the institutional investing experience and the risk
Hmm.
that comes with that, right? And so I'd say like the biggest piece of that is track record. We each have had amazing institutional LPs in the past. Some of the big names amongst our team of previous LPs include
Hmm.
Best, Canada Pension Plan, Walmart, to name a few. And then outside of that, of course, when you think about track record, it's also about like, okay, like what have we done in terms of accomplishments? So
Hmm.
did one of our general partners, his prior experience, he's had an exit as a founder. Same with Seth has had an exit as a founder, both kind of in this vertical AI space. And then of
Hmm.
course, best case scenario, Seth is really kind of the prototype, I'd say, of the type of founders we like to back. So his background
Hmm.
was investment banking, but specifically on the HR side of the house at a large
Okay.
corporation. And then as a consequence of that, he was on their investment committee trying to figure out which HR tools they can implement into that organization, as well as potentially invest in through their venture arm. He spun out, he launched his own HR company, specifically leveraging AI, and had an exit in that space. So again, like that's kind of like typically like the founders we like to back that have that decade of experience deep in
Hmm.
industry, ideally at a large corporation. And so they have, again, like those early customers, early advocates. And then, of course,
Hmm.
that typically does get them to that earlier exit. And then Sid's background, like I mentioned, very similar in terms of kind of exited founder in the vertical AI space. And then, of
Hmm.
course, my background, I've just been investing in vertical AI since around 2020 and have been
Hmm.
fortunate to have some great markups and great exits in this space. And then more specifically in terms of the second bucket, I'd say is what, like, not obviously it's okay, what we've done, but also like where we're going, what we're building, right?
Right.
And so
Right.
I think in terms of like our vision and our mission, it's really to do venture differently. I think that lands with a lot of people. I think a lot
Hmm.
of people have felt historically left out of venture.
Hmm.
Not in SF because they're not in New York, because they're not in Boston. Sid's a great example. Like he moved from Toronto to SF to be a founder because at the time it felt like that was what you had to do. Uh,
Sure.
but we exist now so that founders don't have to make that same, parity of choice. Instead,
Hmm.
they can, actually stay where they're at, stay close to customers, stay close to those
Hmm.
early advocates, because studies also do show when these companies, early stage companies specifically, are closer to these corporates and strategic partners, it typically results in a 3 to 4x increase on the valuation multiple at exit. So it is really great when they do kind of stay, and we want
Right.
more founders to have that same trajectory. And so that's really kind of our mission, our vision, and our values as it relates back to how we want to do venture differently. And, obviously our main kind of I think differentiation is the geography and that we're so focused on vertical AI and application
Hmm.
layer because there's a ton of people who are still, so focused on horizontal tools or AI infrastructure. And I think that our kind of niche of geography and also vertical specific application layer companies makes us pretty differentiated.
Fantastic. Any final thoughts you want to share with our listeners today?
Yeah, I think maybe like in terms of final thoughts, I'd say probably maybe like two things. Like one, I think there's so much optimism as we all are heading into 2026, specifically around kind of what's next in venture, right? I think, we've seen historically slow deployment years. And as a result of that, it feels like, for lack of a better word, almost emotional drain on all parties involved, right? It feels slow
Right.
for the LPs, feels slow for the GPs, and it feels like we're kind of wading in the water, for lack of a better word. And I think 2026 is really going to be different in the sense that people have dry powder on the LP side, on the GP side. And the one thing that we've seen is we still got to allocate, we still have to move. And even as we're kind of navigating this slower climate, there's still really great companies being built. And the pace of adoption on the enterprise side for these kind of vertical specific tools is what grounds us and makes us really excited. Because when you look at the numbers, a lot of people think back to, enterprise SaaS and they'll compare AI to SaaS. And the main piece that people are really, really starting to acknowledge and adopt is that AI tooling is going to already outpace SaaS in terms of kind of the growth and adoption curve. And then of course, it's just a quicker time frame for those businesses to get really large in terms of sales and revenue. So we're seeing something that's completely different, and I think is reason for optimism in what's been kind of historically a slow year back to back.
Awesome. I love the optimism. So where can people learn more about 11th Wall and how they can contact with you?
Yeah, of course. So, and I will, you can hold me to this. But going forward, I think I'm going to try and post once a day on LinkedIn. So find me on LinkedIn. And then from there as well, always, happy to chat with folks either through LinkedIn InMail or email. I think my email probably is on my LinkedIn. If not, out. And yeah, I try and pride myself on being one of the more accessible people in venture. I think historically used to be you need a warm intro to talk to a VC. Sure. I'm pretty anti-warm intros. So find me online. I'd say probably chronically online most of the time on either LinkedIn, also TikTok as well. And yeah, let's chat more.
Fantastic. For all of you listening, I encourage you to like, follow, comment, and share this great interview. And Alana, thanks again for being on the show.
Thanks so much, Scott.
Welcome back. When I was speaking to Alana from 11th Wall Ventures, we got to understand a little about her fund focus and the thesis that is squarely focused on investing in vertical AI companies at the seed stage, concentrating on the application layer, how AI is applying itself to legacy and traditional industries. And she really has a non-traditional geographic focus. She intentionally invests outside of San Francisco, Boston, New York, targeting areas like Michigan, Ohio, Florida, Texas, and the Southwest, where the valuation can be more attractive. So the fund seeks to differentiate itself through that geography and by targeting founders that can achieve 2 to 3x increase on the valuation exit by staying close to corporates and strategic partners. Now, from a founder standpoint, she wants founders that are in a niche, that have that white space opportunity in the market. And these founders need to have an unfair advantage, which can include thought leadership, a loyal fan base, a newsletter with many subscribers, or an affinity group that can translate to early customers or angel investors. So she encourages founders, don't shy away from those non-revenue income-based traction items because they can really provide an unfair advantage. And at the end of the day, she wants founders to explain why now. And I think she has a really interesting perspective. I found in my experience, I spent decades in Silicon Valley, but I found great opportunities in these hidden markets, the markets that are between the coasts. And Alana and 11th Wall have really taken advantage of that. So I encourage you to listen to this podcast, like, comment, follow, and share. And make sure you come back next time for the Emerging Managers Podcast. And again, I'm Scott Kelly, your host. See you next time.
Join Scott Kelly, Tracy Hazard, and their high-performing capital fund manager guests next week on the Emerging Managers Podcast. Don't miss our upcoming virtual and live VC Fast Pitch and podcast events. For more details, background on our guests, or an application to be our next guest, visit emergingmanagerspodcast.com. Don't miss out on shaping the future of venture capital and entrepreneurship with us by joining our robust community of innovators and investors today.